Good evening, this is Bizworld and I'm Adrian Seet. Bank Negara is expected to raise the overnight policy rate OPR by 25 basis points BPS to 2.25% at its fourth monetary policy meeting MPC this week. According to Moody's Analytics, the central bank hiked the rate in May, lifting it from the record low where it had languished for nearly 2 years. Meanwhile, MIDF research said Bank Negara will consider for another rate hike by 25 BPS following the continuous rise in core inflation, reflecting solid underlying domestic demand. Upbeat momentum in distributive trade sales, a dip in unemployment rate to new pandemic low at 3.9% in April, and double-digit expansion rate of external trade provide positive signals of strong recovery in the economy. The sustained reopening of the global economy and the improvement in the labour market conditions has continued to support the recovery of economic activity. The trend of foreign fund outflows continued on Bursa Malaysia for the fourth consecutive week. Last week, foreign investors net sold 320.3 million ringgit of Malaysian equities. MIDF research noted this was an accelerated pace from the 61.5 million ringgit net outflow the previous week. Foreign investors were net sellers for the whole week, except on Tuesday when the net bought 17.2 million ringgit. The heaviest outflow observed was on Thursday at 196.3 million ringgit. To date, international funds had been net buyers for 17 out of the 26 weeks of 2022, with a total net inflow of 6.07 billion ringgit. Maybank Investment is maintaining its neutral call on Malaysia's property sector due to growing risks such as slower sales amidst the rising interest rate environment. Further interest rate hikes will not only hit buyers' affordability but also highly geared property developers. Other factors are due to the delays in new property launches as well as rising raw material costs and labour shortages. It also expects buying sentiment on big-ticket items to be affected by political uncertainties ahead of the 15th general election. Without the home ownership campaign, residential property sales in the first quarter of 2022 declined 6% quarter-on-quarter to 23 billion ringgit. The firm says housing approvals, better housing planning and launches are equally important to solve the persistent overhang issue in the country. Hong Leong Investment Bank continues to expect a recovery in construction flows this year, driven by the MRT3 rollout in December of 2022. Based on industry checks, the 3 civil turnkey contracts would carry a total value of 26 billion ringgit to 28 billion ringgit. Civil tender briefings were held recently, and factoring in the evaluation period, December 2022 is a reasonable timeline, assuming no general elections in between. Thereafter, the firm expects a string of subcontract awards in the first quarter of next year. Given that the minimum payment moratorium period was 2 years, contractors with better balance sheets were significantly advanced in tenders, and thus the sector coverage earnings are expected to recover this year. At the same time, the firm flags rising concerns over the deteriorating labour shortage situation. Sime Darby is exiting the non-core ports business by divesting the entire equity interest in its WeiFang port companies in China for 1.27 billion ringgit. Indirect wholly owned subsidiary Sime Darby Overseas Limited has signed agreements to sell its stakes to SPG Bohaiwan Port Group Company Limited. For the disposal, Sime Darby will receive an indicative sum of 357 million ringgit. The share sale agreements are expected to be completed by the fourth quarter of this year. Sime Darby has in recent years been progressively divesting assets which have been identified as non-core as part of the group's efforts to streamline its portfolio. Also, redeploy capital to support the growth of its core businesses of industrial and motors. And that's all the time we have for Bizworld this evening. I'm Adrian Seet. Thank you for investing your time with us and stay tuned.